Hello, everyone. It is a great delight to welcome you to another intriguing and interesting program series for this quarter titled Widespread Financial Literacy and National Wealth Creation. Thank you so much for joining us on today's episode. It is Amalgate Radio Communications, and I remain your host, Titilola Ogunshono. Last week, the maiden edition, we started by laying the foundation of financial literacy. Today, we'll be taking this further. An essential part of modern economic life is financial literacy. Whether like it or not, every day individuals, businesses, government agencies make financial decisions. Financial literacy refers to the knowledge, the skills, the attitude, and the behavior that enable people to understand financial concepts and make informed decisions about spending, saving, borrowing, investment, and also risk management. The Organization for Economic Cooperation and Development, OECD, emphasizes that financial literacy is becoming increasingly important because digitization and expansion of financial products are changing the way people manage money. That is today's reality. Likewise, the OECD and INFE 2023 survey also revealed that the average financial literacy score across the participating countries and economies was about 60 out of 100, thus revealing significant gaps, in financial knowledge and decision-making skills. And when we come back to developing countries, taking an example of the Nigerian environment, according to Enhancing Financial Inclusion and Advancement, that is EFINAA's 2023 Access to Financial Services Survey, what the survey found out was that 74% of Nigerian adults were financially included, while we still have about 26% remaining financially excluded. That brings the issue of financial inclusion. Yes, we could have economies, making sure that people are financially included. However, access to financial services doesn't necessarily imply that people can use those services effectively. That's where the issue of financial literacy comes in. Financial inclusion is very important. Financial literacy is where the emphasis is on, for this program, because you can be included but not being financially literate. And we realize that financial literacy goes beyond just saving, investment. It also, expands to areas of financial planning and also risk management. That was an IMF analysis of Nigerian environment, which revealed that more than half of Nigerian adults had limited financial literacy and capability, particularly in areas such as financial planning and risk management. As we go further today, still looking at some crucial foundational blocks of financial literacy, we will be discussing some important concepts and reasons why financial literacy is important in building wealth of a nation, using relevant statistics and country-specific examples to demonstrate how financial knowledge can empower individuals and contribute to a stronger and more resilient economy. So today we are going to be asking ourselves this question: am I financially literate? And why this is important, why I'm passionate about this, is you can't talk about building the wealth of a nation if the citizens are not financially literate. You can't talk about economic growth, you can't talk about economic development, you can't even talk about sustainable development if individuals in an economy are not financially literate, if individuals do not understand what it means to plan financially, if individuals don't understand risk management. Okay, so we are going to ask ourselves, do I have the ability to understand, evaluate, and effectively deploy financial information to make informed decisions about money? I'm going to take it again. Do I have the ability to understand? You must evaluate, and effectively deploy financial information to make informed decisions about money? Do I have enough knowledge and skills relating to budgeting? Do I know what it means to budget? Do I have the skills to make my budget? Do I have the skills and knowledge about borrowing? Do I just borrow whatever comes my way? Do you have enough skills to be able to look at interest rates, analyze the impact, look at various borrowing options? Do I have the skills and knowledge, about how to invest, various investment opportunities? Do I have enough skills and knowledge about risk management? Do you even understand that we have two broad types of risk? Do I know the systematic risk, those beyond my control that I cannot control? I can't control inflation rate. I cannot control exchange rates. To realize I can't control that. These are things not within my purview. Do I even understand that some things I can control, or systematic risk that I can control? Do I even know that even I cannot control the systematic risk directly? Do I have enough knowledge about different ways to hedge the risk in order to mitigate against these unforeseen contingencies, the risk beyond my control, not within my purview? Now I'm going to ask ourselves, do I have enough information about insurance? Do I have enough information about tax brackets, about taxes in my environment, in my community, in my nation? And if I also operate, in a multinational environment, do I have enough tax information about other countries' laws? Okay, so you're going to ask yourself. So that is financial literacy. So if your answer is yes, then you're on the road to say that you're financially illiterate. If the answer is yes, you are financially literate. But if the answer is a no, or there's an aspect that you do not know, I will not say maybe you're financially semi-literate or you're financially semi-literate. Okay, but one thing that we should also know on this journey as we go is the consciousness. When you know that you don't know some things, now the consciousness to learn about those areas come into play. Okay, now we also want to ask ourselves, do I have the ability to process economic information? It's not just for economists. It's not for those in the BSc in economics, the MSc, the PhD in economics. Financial literacy is what every young adult, not even adult, young adult should know, should have the skill in an economy. Do you have the ability to process economic information and make informed decisions about things like financial planning? We all plan our individual lives. Do we know how to plan our lives? And the financial input to those dreams, to those goals that you want to achieve. Also, do you have enough to make informed decisions about wealth accumulation? What about debt? What about pension? Do you have enough? And I like this because this definition that I'm saying you should analyze yourself against is it makes that connection between financial knowledge and actual economic decision making. Some people know some of these concepts, but how many of us apply these concepts when you are making your decisions? Financial decisions, business decisions, individual financial decisions. How do you apply this? So if the answer is a yes, that you have the ability to process economic information and you can make informed decisions effectively, optimally about financial planning, wealth accumulation, debt, pension, then you are financially literate. But if it's still a 50-50 or 30-70, it means that you are tuning in to the right program. Okay, now I looked at some researchers, what they've done, and I saw one about Austin, and they argue that financial literacy has two important dimensions. Whatever definition you are coming up with, there are two dimensions to it. The first dimension is the financial knowledge, knowing the concepts, knowing what to do, knowing the risk management, the debt, the wealth accumulation, savings, investment, the credit card, the debit card, knowing the intricacies of all of this. Yes, that is one component according to Austin 2010. But the other component, the other dimension that is equally important is your ability to apply the knowledge to financial decision making. Most times when I have to teach, I have to lecture, I have to mentor, I say that the interesting thing about this concept is your ability to apply it to your everyday life. That is the essence of what we are teaching. There must be a connection between what you have learned, and applying those knowledge base, comes the skills acquisition. It's knowledge that you have applied consistently that leads to skills. Now, if you have not started, this is the right place to starting this. Yes, financial knowledge, but other dimension is the ability to apply the knowledge to making financial economic decisions. And the reality across board is that there's actually a gap between financial concepts and making good financial decisions. I think that's a place where we bring in more experts, to talk about this. How do we make that connection? What are the realities? What are the steps that we need to take? And also financial literacy. You must have the ability to understand and implement certain valuable skills that can improve one's money management. I think it's going to be a very practical session throughout this quarter, because it applies to every sector, it applies to everybody, it applies to everyone every day, because you need to make financial decisions. Some people every hour, some people twice in a day, 4 times in a day, 5 times in a day. But it's better that you understand this concept, because there is no nation that will grow beyond the capabilities of its people, and there is no way a nation can build wealth. There is no nation that can grow economically if individuals are not optimized their potentials and also with particular reference to their finances. There are various parts, there are various components of financial literacy, but on this episode today, I will start with the key components of financial literacy. I like to term them the KBA of financial literacy. So we'll talk about the K, that is the financial knowledge, the B, the financial behavior, and the A, financial attitudes. Okay, so we'll talk about financial knowledge, the financial behavior, and the financial attitude. That's what I term the KBA of financial literacy. So when I talk about financial knowledge, I asked the question when we started earlier. I said you're going to ask yourself, do you have the ability to understand key economic concepts, financial concepts? Now, when you talk about financial knowledge, you're asking yourself, do you understand some key economic principles, financial principles, things that affect everybody in the economy? Do you understand what inflation is? Okay. Do you understand living costs? Basic concept like interest rates? Do you understand basic concept like risk? Basic concept like insurance? Do you understand what portfolio diversification means? These are things that you need to know. Financial knowledge about things happening in the environment. Do you understand? Do you have the ability to track news about the economy and financial issues? So what I even advise you today is that you can go online, be deliberate about spending 10 minutes, 20 minutes a day reading up about financial issues, economic issues. That's a good place to start. Do you have the ability, information, to compare financial products and services? You have a lot of financial institutions, you have a lot of lending credit institutions out there. Do you have what it takes? What are you comparing when you're looking at a particular bank to another particular bank, a particular credit organization to another one? What do you look at even within a banking, within a bank? What are those products that they have? Do you have what it takes to be able to analyze what the futures are, what pays you as an individual? How do you optimize your financial resources? You need to understand basic financial concepts. That is one aspect of financial literacy, your ability to understand basic financial economic concepts. Now, you can understand all of those things, key principles, okay? But do you also have the second component, which is the B? The B, for bird, the B component, that is financial behavior. So there's a difference between knowing all of those things and actually your behavior. It refers to how people actually manage money. Okay, do you prepare budgets? do you save? Most times the excuse which happens to almost everyone, including myself, is that inflation rate is high, living expensive is high, there's no way I can save. But what I've always done over the years, and always encourage people to do, what I've done is that it might not be more, just set a percentage of what you earn. So if your percentage is 5%, what matters is the consistency, not how much you save. I'm going to repeat it. What matters is the consistency, not how much you save. So if what you can do is to say what is realistic is to save a 10% of what you earn, it's fine. If what you can start with is a 5%, it's fine. But the financial behavior has got to do with financial discipline. It has got to do with you adhering. Consistency, it's what is important. That's the word here. So consistent savings, and also do you compare financial products? Because there are certain financial actions that could have negative impact on the financial health of an individual. That is very important. And let me tell you what it is. There is no way an individual's financial life will be improved, and you don't expect it to have effect on the wealth of a nation. Because when you talk about the wealth of a nation, you are talking about the wealth of individuals. It's accumulation, the macro level of individual units. So if a majority do not have saving culture, if majority has consumed in debt, definitely how do you want such a nation to grow? Financial behavior, still on it. Late repayment of loans. Some of us, yes, it's not a matter of a one-off thing. If it's one-off that you are paying late, yes, because some things, unforeseen contingencies, some things you have not planned have come up. But however, when it becomes a trend, when it becomes something you are known for, it will be your credit score, and that will also affect your ability to be able to get facilities in the future. So financial behavior, we need to be disciplined to avoid late payment. And also this is one thing that is peculiar to some of us as well, when we do impulse buying. Now, there are times where you want to buy on impulse, when you have not planned for it and just have to buy. Yes, it could occur, but I always say, when it becomes a trend, when it is not one-off, when you can sit down and say that I bought on impulse maybe 8 out of 10 times, then that becomes a very bad habit, and that is financial behavior. So these are components of financial literacy. It's not just about having the knowledge, but having the right financial behavior, because if you do not have the right financial behavior, it's going to impact your financial health as an individual, as a business, as an organization. So let's like the last A, which I mentioned, the KBA of financial literacy, financial knowledge, financial behavior, and the A is financial attitude. And the attitude refers to people's beliefs and approaches towards money. Okay, now the attitude is also very key. Behavior, yes, attitude is also very key. Now let's give an instance. Do you have the attitude of saving for the future, or you have that attitude of once I make it, I spend it all, tomorrow will take care of itself? Okay, no, not when it comes to real financial literacy, yes, tomorrow will take care of itself, but you need to plan and save for the rainy day. Okay, so saving for the future rather than spending it all. And some people believe in spending it all, that tomorrow will take care of itself. Okay, so we need to have the right attitude to know that saving, like I said about financial behavior, you must save, it must be consistent. It doesn't have to be so much, but please find something that works for you, for your business, for organization, for your agency. Saving is very important. It's important because it allows you to take advantage of opportunities, because when you are liquid, there are opportunities that you could latch on to, okay, that will also give you major breaks. Okay, and research has shown that financial attitude is related to the level of financial literacy of the population, and this influences the decision of consumers of financial product. So the attitude is very key. So remember the main components. We have the KPA, the financial knowledge, the financial behavior, and the financial attitude. So I want us to look at ourselves and say, do I have the right financial knowledge? If it is yes, do I have the right financial behavior? Am I applying the right financial behavior to show that I'm financially literate? If it's a yes, so benchmark yourself again the third financial attitude. Do I have the attitude to save for the future, or do I have the attitude to say tomorrow will take care of itself? I should spend all that I have now. Okay, that's the KBA. There are also other components which I mentioned earlier. So we look at other components that when talking about financial literacy, these are things you should also know as an individual. Let's look at other components. Okay, financial planning. This is very important. It's like the GPS of your financial journey. Now I'm going to ask you. We do a lot of smart goals. We set goals for ourselves. Do we sit down? Do we know the nuances, the intricacies, the fundamentals of financial planning? These are things that we should know. What we do also on this program is we get experts to talk to us on financial planning. I'll also take it. Okay, do we know, budgeting? Do we account for every currency, every dollar, every naira, every pound, every yen spent? Do you account for everything? And I tell people, when you go out in a day and I've spent so dollars USD in a day, can you account to the last dollar, to the last currency? Can you account to the last naira? Can you account to the last pound that you have spent for that day? You need to budget. You need to account for all that you spend. What about your debt management skills? Okay, do you understand the various repayment plans? Do you understand the various facilities, the loan options, which is good for you? Okay, do you understand the proper use of your debit, your credit cards? And of course, when it comes to investment, another aspect of financial literacy, that various investment options, and each investment option will have its risk element. Do you understand the risk inherent in each option? Do you understand how you calculate your viability of each project? And also, do you understand the various government policies, relevant policies that you should be looking at when you are taking or deciding on any investment option that you are going to take, you are going to embark on? Do you understand the various insurance policies, those that are statutory, those that are optional, those that are relevant that you need to take? Do you understand the various tax issues? Okay, do you understand what tax avoidance is, what tax evasion is, the tax evasion avoidance issues, the tax brackets, the tax holidays, all of those things? Do you understand them? And of course, you understand the interest element, whether you are earning interest as an income or you are paying interest on a facility. These are the dynamics of interest rate that you should understand. In fact, do you understand the capital market? Do you understand the money market, the financial market? How does it work? You don't have to be an economist, you don't have to be a financial expert before you understand some rudiments, some fundamentals of these aspects of financial literacy. We'll take a quick commercial break and we'll be right back.
At Armor Gates Training, we believe professional development should do more than inform. It should transform how people work, lead, and deliver results. That's why we support organizations through conceptual insight, practical learning, and performance evaluation right at the intersection of leadership, strategy, and institutional transformation. Our approach focuses on practical learning format that professionals can immediately apply in their workplace. At Armor Gate, we don't teach theory alone. We equip participants with real-world insight drawn from almost 2 decades of organizational transformation experience. Our programs combine multiple learning methods designed for real-time measurable results. Through seminars, we facilitate deep conversation on key subjects. Using group exercises, participants collaborate, reflect, and think strategically. With case studies, they then sharpened analytical and decision-making skills using real industry scenarios. Through relevant videos, we spark insightful discussions using relatable real-life context. All in all, every participant develops an individual work plan, ensuring the learning turns into real action after the program. Our training programs are hosted in world-class venues across global cities, including Addis Ababa, Nairobi, Mombasa, Cape Town, Dubai, Singapore, Kuala Lumpur, London, Florida, and Washington, D.C. Let's work with you to turn learning into your organization's growth. For more inquiries, call +234 807 9574 151 or WhatsApp +1 610 504 6026. Visit www.thearmorgate.org. Follow us on Facebook, Instagram, and LinkedIn at Armorgate. Armorgate Training, transforming knowledge, interaction, and growth.
Thank you for staying till the program is widespread financial literacy and national wealth creation. For those just joining us, we've been discussing the fundamentals of financial literacy, and I asked our listeners to ask themselves some basic questions so that you can check if you are financially literate. And we went further to talk before the short break about the main components, like I call it the KBA of financial literacy. And we said the KBA is the financial knowledge, the B is the financial behavior, and the A is the financial attitude. So let's go further to ask ourselves a basic question. We heard a lot about financial literacy, the various components, the budgeting, the investment, understanding risk management, the tax issues, insurance, various aspects of it, financial planning, which is also very core. So let's ask ourselves, why does FL matter? How does financial literacy matter? How does it matter? Let's look at what the 2023 International Survey of Adult Financial Literacy revealed. It shows that adults who score very high on financial literacy had higher levels of financial well-being and financial resilience than adults who scored lower. So for adults that had high level of financial literacy, they had higher level of financial well-being and financial resilience. So whatever comes up, because they're going to be shocked, we didn't plan for a pandemic, it came in. So for those who had higher level of financial literacy, were able to absorb those shocks, when they came on board, than adults who scored lower. So that alone, this revelation brings the need why countries around the globe are, upscaling their game in terms of upping their game, in terms of increasing the level of financial literacy among their people. So let's look at the various reasons why does it matter. Okay, the first one I'm going to talk about is it encourages savings. I've said it, and we cannot be overemphasized the need to save. Because what if you do not save as an individual? If the nation is encouraging people to save, what will the basis for it? What will be the capital formation for investment? And if we do not invest, if we do not produce, what happens to our gross domestic product, economic growth in a nation? How do you want to increase your production capabilities when you are not saving, when you are not investing? That is the foundation, capital stock. It encourages savings, because financial literacy will teach people how to budget their income and save. You're going to reduce the need for impulse buying. You're going to increase your awareness, self-awareness of accounting for every currency that you earn, either from salary, paid job, wages, or either from income, profit from business deals, from business transactions. Okay, so I want to look at the OECD PISA 2022 Financial Literacy Assessment, which provided comparable data for countries, about 5 countries. Talked about Belgium, Denmark, the United States, Brazil, and Malaysia. Okay, and I want to look at what it is. What the figures showed us that for Belgium, 94% of students reported saving. We had also high. Denmark by 94, US 95, Brazil too was high, Malaysia too was quite high. So if you look at the fact that it was high in these countries and looking at what they do in terms of economic growth, in terms of production, you will see a direct relationship. That's one of the reasons why people must be financially literate. It's going to help encourage savings, and we cannot overemphasize the importance of savings. Now, the second reason is that it promotes borrowing responsibly and reduces excessive debt. Yes, you will need to borrow. Yes, even the rich nations also are indebted. We have quite a lot of them borrowing, but it must be productive debt. If it applies to a nation, it must also apply to you as an individual. That's the only way we can build wealth for a nation, is because you must be financially disciplined. You must understand basic issues like interest rate, loan conditions, your repayment plan, your schedules. You cannot be earning monthly. You cannot be getting your income on a monthly basis, and you are borrowing funds that you need to do a weekly repayment plan. That is a mismatch. I'm going to take it in. You cannot earn on a monthly basis and you want to be paying loans, your facility on a weekly basis. It's going to stretch you. That is a no to a very large extent. And of course, you have to borrow responsibly. When you are borrowing, are you borrowing for consumption or you are borrowing for investment purpose? Yes, don't get me wrong. Sometimes you need to borrow for running costs. Yes, because you need to transport yourself to work. You are going to need to feed your body. You need to get some drugs. But that is still a form of investment, because you need to keep your mind, body, soul intact. But it becomes, if you're not borrowing for parties, getting funds for what you know that is not a need, it's just a want. We need to differentiate between need and want. Okay, so you have to borrow responsibly. High level of financial literacy, understanding basic financial discipline, financial planning would help you borrow responsibly. There are questions you're going to be asking yourself before you go out there to take any loan. Some will say, well, it's interest free. It's nothing. It could be interest free loan. Also understand that it is still your reputation at stake. Because if I want to give an interest free loan, for instance, to a family member or a friend, and you do not return as I went you, and I do not see you borrowing it responsibly, it's going to hinder you from getting more from that source in the future. So nothing comes free. You must Financial literacy will promote borrowing responsibly and also reducing excessive debts. Why does financial literacy matter? It supports entrepreneurship and business development. With some episode that we did last year, we spoke about SME, and we realized that the small medium enterprises are measured the backbone of many economies around the globe. Like developing economies, they make up a strong part of even the employment quota. They employ more people in some economies. Okay, so definitely entrepreneurs, once you understand basic financial concepts relevant to business, is going to help them. You understand concepts like your cost, what are your total cost, your variable cost. You look at your fixed cost. You need to know your revenue. You want to know your profit margin. At what point do you break even? You look at things like your interest rate. You look at things about loans, facility, the short-term facilities that you use, the medium-term, the long-term. You understand concept that you do not do a mismatch. You do not match a project that will bring you income in the long run with a repayment plan, a facility that is short-term in nature. You do not do that. These are things that will help. Financial literacy, once you start early, once you understand the rudiment for entrepreneurs, it makes them better, at financial planning, and also that will even, have effect on their profitability margin and even the sustainability of the company, which is very important. I wish we could go on and on, but let's just take one more, on today's episode. Of course, once you have high level of financial literacy in an economy, it will help you navigate the shocks. It will understand the fact that you are going to need to keep emergency funds. Okay, even in economics, we talk about the reason why people demand for money. Talk about transactional motive. People want to demand for money for day-to-day expenses. We talk about precautionary motive, where people plan for foreseen contingencies, and we spoke about speculative motive, where you want to take advantage of an investment that will come up. Speculative motive in the capital market. So definitely, once you understand and have strong knowledge of financial literacy, you can navigate all of these fronts easily, because whatever it is, the precautionary motive as economists, we demand for it for unforeseen contingencies. So imagine when you are not even keeping funds for emergency situations. What happens to you as an individual? What happens to you as an organization? And what happens to you as a government when you're not thinking of the future, when you're not planning well, when you're not keeping funds for the future? Wow, I wish I could go on and on, but this is all we can take on today's episode. I'll be drawing the curtain here. I will not go without leaving us with a quote of Robert Kiyosaki. Says that people with low financial literacy standards are often unable to take their ideas and create assets out of them. And I always love to say this, that your talent, your ideas should create wealth for you, but there's a disconnect if you do not have high level of financial literacy. Well, I hope you join my colleagues in that program. Very interesting, very exciting, very expository themes for this quarter, Monday to Friday, 5 p.m. WAT, still on Amogate Radio Communications. I hope you join me again next Friday, 5 p.m. WAT. And if you have any questions, feedback for us, any aspect of this financial literacy you want to hear, want us to be expert on, please send all your comments to contact@theamogate.org. And if you know what you want us to learn more about what we do, our product, our services, what we do, our clientele base, want to learn more about us, can you check us on our social media handles? On Facebook is Amogate, on LinkedIn is Amogate. If your training consulting needs, we have you covered. Thank you so much for staying tuned till I find my way to your devices again next Friday, 5 p.m. WAT. I remain Titulala Ogusha saying bye from here.
Amogate, founded in 2008 out of a desire to build transgenerational structures for organizations, institutions, and nations. We have worked with large businesses, international development organizations, and public sector ministries and agencies. Amogate, our uniqueness is that we do not just work for you, we work with you. For example, we do not leave you to the task after sourcing talent that will help the new hire settle into robust leadership development programs. We are technical experts in advising and supporting institutions on strategy and leadership, artificial intelligence, strategic human resource management, public sector reform, finance, audit and tax, FAT, and strategic communications. We do all this and more out of a desire to transform nations through institutions and organizations. For further inquiries, email contact@theamogate.org or call +234 810 999 6666, +234 807 957 4151, and +161 0504 6026. www.theamogate.org. Amogate, building to endure and transforming nations through institutions and organizations.